Okay, and we're moving into a different sphere now in terms of longevity investing and the profile of that. We now have Dani Saurymper of Pacific Asset Management. Hey, Dani, how are you? Good to see you. And of course, Dani is going to give us the perception of investing from a different perspective. So, Dani, over to you.
So as Andrew's in the audience, I thought I'd start with a famous quote from Andrew, but I'm well aware you'll have heard about the amazing science and progress that's being made in the field of longevity, and I certainly share a lot of that excitement. But I think a more pertinent question is, well, what about today? What about the here and now? What are the companies, what are the sectors that I can get exposure to that are already providing products and services that addresses this aging demographic? I always fall back on quotes to Andrew. He's the person I blame the most for being involved in the field of longevity. My background's in pharmacology. I've spent many years researching pharmaceutical companies on the sell side, but also more in the last 10 years or so on the buy side, running a health fund for AXA. And I conceptualized and launched their longevity fund before moving to Pacific just over a year ago, and we just celebrated a year launch of the fund. Now, if we go back to 2018, a much happier time, pre-COVID, the world was a very different place, but it was quite monumental for a number of reasons, not least of which was the number of people over 65 outpaced the number of people under 5 for the very first time. And if you look at that over 65 group of people, their forecast, and this is the UN World Population data as of July of this year, the over 65s is forecast to grow 5 times faster than the under 65 population over the next 10 years. And in China alone, just as an example, they're going to add 84 million people to their over 65 cohort, which is the exact same population of the entirety of Germany today. So it really is profound, and the pace of aging is also different to what we've experienced. And I pick on China again because about 12% of its population today are over the age of 60, 65. That will more than double over the next 20, 30 years to 28% by 2050. So it is a truly global issue. It's not just every day 10,000 Americans, the baby boomers, hit the age of 65 and retire. It is happening across the globe, and it will have, in my view, arguably this century's biggest political, economic and social transformation. I say economic because we're going to have shrinking workforces that needs to be mitigated. Some of that will be through technology and productivity. I say I say political because there's going to be an increased burden on government to provide social welfare programs to look after an increasingly large and potentially frailer demographic, hopefully not, given all the science that we've heard about today. And it also will have huge societal implications, both in terms of, I think it was 2 days ago we heard the world hit 8 billion people. What was not told, or what should have perhaps been told, was we don't have enough children being born. And we're going to have an increasingly larger proportion of elderly people and fewer younger people potentially to look after, but certainly to maybe be the providing some of the tax receipts to pay for some of those social welfare programs. I'm also going to fall back on another exhibit from Andrew, so he has to indulge me and forgive me. But if you go back over the last sort of 100 or 200 years, in fact, every 10 years we've added around 2 to 2.5 years to human life expectancy. And it's really a remarkable triumph. It's something that, sorry, I'll give you the current number. I'm sure that's gone up even higher, and depending on which country you pick, it's higher still. So Japan, I believe it's 107 or 108 even. But I think what's really interesting here is it's not just a case of, one, we're living longer, but we're living longer, and as you heard earlier, with an increased burden of disease. We're getting very good at not dying. We're living with multiple chronic diseases. We can manage that through medication, but that is also then creating more and more burden on the healthcare systems, on social welfare programs and the like. when I think about investing then in the longevity field, I think about it from a lifespan perspective, I think about it from a health span perspective, and the third element is wealth span, because with a longer life, we're going to have a longer wealth accumulation phase, and even with a very long life, if we were to maybe work for 50 years and retire at 70, which is more than probable, then we're still going to have a 30-plus year retirement to decumulate our wealth through, and have we saved up enough to last us that longer period. And I think when I look back, and I certainly look at my parents, and then I look at my children, the historical model that we were all brought up on was that three-stage model of life: go and get educated, have a career, and then retire at 60, 65, go off on a cruise, and happy days. Unfortunately, that is just not fit for purpose anymore. We are going to have multiple careers. We're going to have periods out of the workforce, re-educating, re-energizing, and again, forgive me, Andrew, he has a great turn of phrase. He talks about recreation, not recreation. And I think there are going to be, we're going to have a much longer middle period of our lives, and even when we retire at 70 or perhaps even later, because we're going to be much fitter and healthier to do so anyway, we're going to still have a very long retirement to have planned for. Now, that's lifespan and life model. What about health span? And unfortunately, health span hasn't really kept pace with life expectancy. And a lot of the science you're hearing about today is about improving people's health spans, not necessarily extending lifespan. And I came across, and I'm sure some of you will be more familiar with Jessica Ennis and Stanley Dashunt, with the Vitality Healthcare Program or insurance program, and they actually leveraged a concept that was called 3-4-50, which is 3 lifestyle choices driving 4 chronic conditions that account for 50% of the deaths in the world today. You'll see on the right, smoking and drinking, we can all agree, is not great, and I wouldn't, as my fund is an Article 8 fund, we're very focused on ESG, we would not invest in companies that are sort of antithetical to improving or extending life or health span. But you can see smoking and drinking reduces your life and healthy life expectancy by roughly equal amounts. Obesity, however, that is a major, major problem, because we all want to live and aspire to that 100-year life, but there's no point living the last 10 years in a decrepit state. And John F. Kennedy said it best, I think, many, many moons ago, which was, it's not enough to add more years to life. We must add more life to those years. And so that really is the principle of sort of 3-4-50. A South African insurer called Discovery then took that on board to devise the Vitality Insurance Program. And the principle being, if you have healthier people in your insured pool of customers, you're maybe going to then result in lower claims. And for you as a consumer, you benefit from lower premiums. So the third piece then is wealth span. And you'll see where I'm going with lifespan, health span, and wealth span in a second, and why I'm trying to sort of set the scene. If you look globally, and I've picked on the US anyway, but about 30% of the US population holds about 70% of its wealth. And yet, if you look at marketing spend, less than 10% of advertising revenues are targeted on that older consumer. It's interesting, it was pointed out to me, I think Mark Zuckerberg accounts for 2% of all of the millennial wealth out of that 5%. So it's quite interesting. What that is important, though, is there's this huge wallet to spend. And baby boomers, they're all retiring, they're hitting 65. Yes, they want to have holidays and experiences, but they're also willing to pay for healthcare and to have a healthier life and extend their lifetime if it was available to them. And we know that about a third of their spending is on healthcare, but 2/3 is on everything else. And that everything else can range from financial planning, it can range from companionship, travel and leisure, personal care, housing, and there's a whole plethora of industries, and which I'll bring to life in a second, that stand to benefit from this wallet, and Euromonitor estimate it's a $15 trillion consumer already today. So we look across 4 major themes. They shouldn't really be so alarming. On the left-hand side is where I always like to start, which is sort of near, I like to think more of my age group, even though I'm not a millennial. I unfortunately missed out on that age group. But this is all about health span. Anything that will prevent disease, avert later illness, so vaccinations, diagnostics, genomics, screening, but also things like vision and dental care, where there's lots of evidence now that shows the the connection between oral health and actual general health and well-being. The opposite end of the spectrum then is that later living piece, and that's really thinking about someone who's over the age of 80 or 85, who is very different in terms of their wants, needs, and desires and their physical mobility to someone maybe who's more recently retired at 60, 65. So we're thinking about hospitals, we're thinking about home healthcare. People want to age in their home, not in a home. We're thinking about infrastructure, senior living, assisted living, and we're also looking at health insurance, and sadly, a reality will be more funeral services as well. In between then, we have healthcare, which you've heard lots about today, and my focus within healthcare is very much on the big 5 diseases of aging, so that's dementia, diabetes, cancer, heart attack, stroke, and arthritis. And then, as I touched on earlier, that longevity consumer, that silver dollar, what are they spending on, and which companies are offering products and services today that meets those needs and desires. And this is sort of a shape of our portfolio today in terms of where we allocate and the various sub-themes within each one. I'm not going to dwell too much on this other than to point out this is where we see the best opportunities today. It's not that we've devised that we wanted 27.3% in healthcare. That just happens to be where it spits out. But what I would point out is that we do obviously have a very high exposure to healthcare, about 50% of the fund. But it's much more, I would say, diversified. So it's not biotech. There is some biopharma there, but it's medtech, it's healthcare services, it's life science tools, it's diagnostics, it's genomics, it's healthcare IT, it's telemedicine. It's much more broad-based and diversified. And I thought I'd give you a little teaser as to some of the names that we currently hold in the portfolio. But what I actually wanted to bring to light here is actually something that links very much to the theme. We are longevity and social change. We're an Article 8 fund. We're very focused on the social pillar within ESG, and that's particularly pertinent in the context of longevity. And one of the things that we're very focused on is gender equality, and that's something that we deal with through our voting and engagement with corporates. But it's worth mentioning that women typically outlive men by 5 to 6 years, and when you look at pension pots as well, by the time a woman retires, they typically have a pension pot 30 to 40% less than male counterparts. So that's something that we're very conscious and focused on. So I thought I'd finish by trying to give you some examples within each of those big 4 themes. We talked about education and well-being. I mentioned something like dental care. It came as a shock to me that something like 36 million Americans have no teeth whatsoever. It was also pointed out to me that 2/3 of the visually impaired are over the age of 50, and not all of them have got corrected vision through spectacles or otherwise. But the one I wanted to touch on was actually diagnostics, which is a company called Hologic. They are one of the biggest providers of mammography equipment. Breast cancer, unfortunately, is still a very significant killer. 50% of all UK breast cancers are in women over the age of 60. I believe it's actually 80% or 8 in 10 of women over the age of 50 account for all breast cancers, and about a quarter of them could be preventable. And part of the business at Hologic is to do with mammography equipment. They also are one of the leaders in vitro diagnostics, and I think coming out of the pandemic, what we've discovered is that the world was incredibly undervaluing the value of diagnostics, and they were incredibly short infrastructure. And they were a big beneficiary. And the punchline really to Hologic is, if you look on the right-hand side on the bottom, typically they would place about 250 to 200 large molecular diagnostic pieces of equipment each year. That massively accelerated during COVID, as there was a huge demand for PCR testing and the like. But what you've also seen them is increase the number of tests you can produce on or do on each box. So the revenue per box goes up. Their install base is huge. And the punchline here is really over the course of this last year, it had performed relatively well. People were starting to question the tail off in that COVID contribution. And the rally that you've seen just in October has actually nothing to do with COVID and everything to do with the fact that that install base has gone up dramatically, and they're going to grow double-digit every single line of their business in the coming year. So another one I wanted to touch on was education. And again, this is thinking through the social implications of aging and thinking about supply of labor. And so in the US, there is a massive shortfall predicted in the number of nurses and doctors that are going to be required. And that is about 140,000 physicians in the next 10 years. The average age of a nurse in the US is 50, and they've not had a great time over the last 2 years, and many are considering retirement, more so than ever before. Adtalem is one of the leading providers of nursing, medical and veterinary degrees in the US. They're also the #1 provider to African Americans, and that is something that obviously from our social change perspective is important. But I think what's really interesting is some data that I can't lay credit to my analyst Julia, if she was here. She spends despite having a family of her own, she decides to read odd things at the weekend, and this was something that she came in back in with, which was the Bureau of Labour Statistics looking at where is the most forecast growth in jobs in the US over the next 10 years, and it is in healthcare and social assistance. And within that, it is nurse practitioners that will see the growth the most. And nurse practitioners are unusual in the US because they can prescribe drugs. Their average starting salary is anywhere from around $125,000 to $150,000. It's a pretty lucrative career. And that's, for me, is quite interesting because it's trying to reduce the burden of the care that the physician is having to deliver and push more onto the nurses. That's still not going to do it, but Adtalem certainly can benefit from this. It's been a rocky road, but I'm pleased to say, actually, if we took this chart from the very start of the year, the stock's up about 40%. But it was very volatile at the beginning of the year. One, because of Ukraine, despite having no exposure to Ukraine. But secondly, they had been heavily impacted by COVID because students weren't able to be taught in hospitals and having proctored learning. Now we're starting to see students back on campuses. We're seeing enrollment trends start to pick up. And so they're now starting to see the benefit of that, along with restructuring of the business. They sold a small part of their revenue and EBITDA, but actually sold essentially 15% of their earnings for about a third of their market cap. So that was massively appreciated by the market. A couple other examples just to sort of leave you with. One is about that silver dollar, that aging consumer, and we find it very interesting that you've got people like Jane Fonda now fronting Henny Moritz in terms of their advertising. And there's a reason for that, because they're recognizing actually that older consumer, they're more loyal, they're more predictable, they don't order 10 items, send back wear one, send that back and just keep one. They're buying 1 or 2 items and they don't cause them any more trouble. So they're actually quite lucrative as a customer. There is this thinking around baby boomers not being technologically savvy. I find that quite insulting, not least because they've gone through the biggest technological transformations in their lifetimes, whether it be landing a man on the moon or the mobile phone, take your pick, which was more significant. And then here we're seeing data that shows baby boomers spend just as long or spend as much time transacting online, but actually they spend typically 10 to 15% more per transaction. So they've got the wealth. I already pointed that out to you. What are they spending it on? Some examples on the left-hand side of some of the things that they are allocating capital to. The thing we're focused on is pet care and companionship. And part of the reason for that is not least because a third of all pets are owned by people over the age of 65, but actually one of the things that we're very focused on is actually loneliness. And a quarter of people over the age of 75 live on their own in the UK. And it's been shown that people who do live on their own have around a 25% reduction in mortality. Whether that be because they've got someone else looking out for them, if they have a fall, if they're being cared for. So companionship can take many forms. Obviously, we'd probably all prefer a humankind, but a furry friend nonetheless does give a sense of companionship. And this is one of the companies then that we invest in, partly out of that perspective, but also you might have heard today around projects going on in terms of aging research into dogs. I'm not sure if that was earlier on in the program, but Pets at Home like to talk about the revenue smile of pets, because in the very early years of a dog's life or a cat's life, there's a huge amount of spend because of litter trays and dog bowls and beds and the like. And then at the very end of their life, you get that pickup in spending as well, because they're humanized now, they're part of the family, and people spend inordinate amounts of money, and myself included in this, keeping their pets well. I have been, for my son, I have been medicating a gerbil with pain relief. So I wouldn't want to tell you how much that cost, which is rather sad. But anyway, last but not least then, I'm going to touch on 2 other examples. Healthcare, I mentioned the big 5 diseases of aging. We heard on Monday from David Cameron a very passionate plea around increasing R&D into dementia. We fortunately have had a breakthrough announced with Biogen and Eisai with lecanemab for Alzheimer's disease. We've got data coming from Eli Lilly in the new year, all being well, with potentially a more efficacious molecule. Remains to be seen, but we'll find out. We also had some disappointing news this week as well with Roche and gantenerumab, disappointing, unfortunately. I mentioned we look at the big 5 diseases of aging. We also look at regenerative medicine, replacement medicine, whether it be a hip or knee transplant, whether it be stem cell therapy. I'm going to sadly leave us with more depressing insights into older life, potentially, but that is urinary incontinence. And unfortunately, about 40% of women in the US over the age of 70 suffer from some form of urinary incontinence. There are various options in terms of treatment. None of them are particularly efficacious and or come with side effects and short duration of action. Axonics is a small mid-cap medtech company that has an implantable device that essentially modulates the sacral nerve, and that enables you to basically not have any leakage, for lack of a better description. It's an amazing sort of under-penetrated market. Only 50,000 adults were actually implanted in 2021, and Axonics were a recent entry into the market. It hadn't had any new technology for the last 20 years, and they are growing phenomenally fast. We'll do around over 300 million in revenue next year, all being well, because they simply have the best product and the best solution on the market, and it's a market that is desperate for alternative treatment options and more permanent solutions, which is such as one as this. Last but not least then, later living. I wanted to just mention social isolation. 80% of an individual's health and wellness is influenced by social determinants as opposed to necessarily your healthcare per se. And this is really tapping into the aging at home rather than aging in homes. Whether it be acute care, post-acute care, assisted living, memory centers, given the burden of Alzheimer's that will increase in its prevalence. I'm actually going to pick out another company here called Amedisys. It's a US company. They are one of the largest providers of home health care and hospice services in the US. This trend for aging at home was very much accelerated by COVID, not least given the scandals around care homes. And we've obviously all been witness to that and seen the consequences there. So a lot of people then chose, actually, I'd rather age in my home. That has a knock-on effect in the home improvement market as well, where homes need to be repurposed, non-slip floors, bathrooms need to be redesigned to accommodate a less able or make it less risky environment. But home healthcare really took off during the pandemic, and we think it's a trend that will continue to persist, not least because it is a much lower site of care. It's much cheaper to treat someone in their home than in a hospital bed, let alone in the emergency room. And the burden of healthcare today falls predominantly on governments. 70% of healthcare spending is paid for globally by the state or by governments, and they are looking desperately to find lower costs of care, and home healthcare is one of those. And then lastly, hospice care, which they are also a very large provider of. Sadly, in the US, about a quarter of all Medicare spending is spent in the final year of someone's life, palliative care, typically in the home or in a hospice. And so again, not the cheeriest of reasons to want to invest in a company, but an essential service that we think will only increase in its demand outlook. So with that, I was going to pause.
Good to know. Well, thanks, Dani, very much for your presentation today. Please, welcome in. Thank you.